Derek here, My Style Mortgage. Hey, I wanted to go over a loan estimate real quick with you. That way, when you get the loan estimate that we're going to send you on your loan, you'll understand where everything sits and you'll be able to read it easier. If you have questions, obviously you can reach out to us, but this should give you a good idea of where to look and where everything sits on the loan estimate. So, jumping in real quick here, on the first section is going to be name, address, property address, sales price. So make sure that's all accurate. On the right hand side, it's going to be the loan terms. So what type of loan it is, if it's a 30-year, 15-year purchase, refi, that type of thing. One section that I do want to point out that's pretty important is right here on this rate lock. If we're floating your rate, then it's going to be checked no, that your interest rate's not locked. Obviously, if we've locked it in or we are going to lock it in, it'll be marked yes. So that's important to look at. And then to correlate with that, right here on the interest rate, if it's floating, that can change, right? But if it's locked in, then it's going to be the same on all the remainder of the documents we send you. But if, let's say we're floating it and then in a week's time you decide you want to lock in, then the rate could be different than what's showing here on the loan estimate. Down here in this middle section, it's going to be your loan amount, interest rate, principal and interest. Projected payments is going to be your principal and interest, mortgage insurance if you're putting less than 20% down, and then your escrow account, which is taxes and insurance, and then any HOA fees if there's anything due there. And then this bottom section here shows what is all included in your estimated escrow account. So if there's property taxes, homeowners insurance, if there was HOA dues, that type of thing, it would be included there. Down here on the closing cost section, this is probably the number one question we get is in this field right here. That's going to show all the costs of obtaining this mortgage, whether it's paid by you or the seller. If there's lender credits, that type of thing, it's not going to reflect in this number. So a lot of times people see that and they're like, man, those closing costs are really high, or those are higher than what you initially told me. Well, that's because it doesn't tell you the full story of those costs. So on page 2, I'll go through that and show you where the credits and everything would be to get you a better idea of what that looks like. And then the estimated cash to close is the amount that you can plan on bringing to closing. Again, there's more details on the next page. All right, page 2. So here, the top section is your origination fees. So this is all the fees from your lender. So things like underwriting fee, application fee, origination charges, points if you're buying down the rate. Most of the investors that we use don't charge an underwriting or an application fee. So typically from us, all you're going to see is origination fees or points if you're wanting to buy down that interest rate. Section B are services that you cannot shop for. So these are things that the lender requires: appraisal fee, credit report fee, if there's flood certification fees, if there's tax service fees, that type of thing will be located here. Section C are services that you can shop for. What that means is things like if there's survey fees or engineer fees, and then all the title company fees. So you actually have the final say on what title company you use. If you're purchasing a home, chances are your real estate agent just selected a title company for you, but you actually have the final say there. So you could go out and shop those fees to see if you can get a cheaper title company because you get the final say there. Back on the top right column, the first section is recording fees, transfer tax fees, stuff like that to the county. Section F is your prepaids. This is going to be your prepaid taxes and insurance. So on a purchase, you have to pay the full year premium up front. So it's going to show 12 months collected right here. And then you're going to have your prepaid interest. So you have to pay the prepaid interest on that loan for the remainder of the month. So for instance, if you close on, let's call it the 15th of the month, you're going to have to collect the remainder of that month. So 15 days of interest that has to be collected and paid at closing. If you close on the 20th, you'd have to collect 10 days. So you get the drift there. Then the next section, section G, is building your initial escrow account. So they're going to collect a couple extra months of homeowners insurance and then a few months of property taxes to build and pad that escrow account so that throughout the year when your taxes and insurance come due, that can be paid from the account. Down here in section J is the lender credits. So if there's any lender credits, this is where it will be. And then the final section here, calculating your cash to close, there any other credits would be listed here. So if there's anything from the seller, if the seller's paying some of your costs, if you've already put down a earnest money deposit, that's going to show up here. So any credits will be listed there. If we're having to pay off any debts, so if you decide, hey, I want to pay off this furniture loan or this credit card through closing, those things would be listed down here and calculating the cash to close. So the very bottom number here, this estimated cash to close, that's the amount that you can plan on bringing to the closing table to fund the loan, to close up on the loan. The next page is not, in my opinion, not quite as important. It's just going to show some comparisons. So, if in 5 years, how much you've paid in interest and everything, if you just make your bare minimum payment, what the APR looks like, then some other considerations and definitions down here. The majority of the meat and potatoes, so to speak, is on page 2 and page 1. I hope this is helpful. Reach out if you have any questions. As you get the loan estimate for your loan from us, you can reach out with questions, but hopefully this at least gives you a layout of where everything is at. Again, just make sure all your personal information is accurate. Names are spelled correct. Addresses is right. Purchase price looks correct. Those types of things. All of these documents that you're going to be signing up front, initial disclosures, are all non-binding. So we can make any adjustments that you want, even after you've signed. So again, the main reason for sending these out is for you to see what the loan looks like, make sure everything's accurate, and then we can make changes as needed as we move forward. Let me know if you have any questions. Make it a great day. Thanks.